Hi traders, Shane from Global Market Trader. Welcome to our GMT Renko Hyper Training video, the T3 buy trade setup, part 1. So we're going to take you through how to identify the T3 buy trade setup. Firstly, we'll cover off our financial services disclaimer. So if you can have a quick read through that, that would be fantastic. Our third slide addresses the issue of the T3 Renko trade buy component. So what are we looking for on a T3 buy? So one of the things that we need obviously is our bullish divergence in price and the MACD. So we're going to take you through a practical example of that on our chart shortly. But what we're looking for is basically price to be making lower lows and our MACD to be making higher lows. So you'll see that clearly displayed in our when we go through our charts shortly. The other component is the condition of the underlying market needs to be oversold. So we're looking for those oversold conditions. Our GMT fatigue index will give you a green dot when the market's oversold. It's pushing to extremes, so that's what we're looking for as well. And then finally, the last piece of our puzzle, trading off support, so either a double bottom, some type of head and shoulders pattern, or a key level of support there to potentially buy off. So they're the three areas of, or they're the three components to our T3 buy setup. Hey traders, we're going to look now at a T3 buy setup. So no doubt you're starting to get familiar with the indicators on your chart. I've loaded up the MACD and you'll see that down the bottom of it. Takes up, as I said before, about a third of my chart. I just like to see what the MACD is doing, how it's trading. Now I have the double bottom, double top, or support resistance index on my chart, which is there. That's our bottom one, and the top one is our fatigue index. So they're really telling us where our potential T3s are setting up. So once we get the two green lights, we're looking for a potential buy setup. We need to have that bullish divergence on the MACD for a T3 setup. So for a T3 buy, we're looking for bullish divergence. Let's go through that again, and just to make sure everyone's clear on that, we need to see price making lower lows. So price is pushing down, making lower lows. Now what we want to see also is we want to see the MACD starting to make higher lows. So basically, instead of the MACD coming down making lower lows, we want it to make higher lows. So that's where we get our bullish divergence. So it's telling us that potentially this move down on our chart is starting to lose momentum. So really the MACD is our basically our momentum confirmation. It's also, we also use the fatigue index to tell us that the market's oversold and we're looking for a potential buy setup. So we're not going to take a buy until we actually get a setup that confirms that we've got support, a level of support. So if we go back through our chart, we've had previous support at that level at 61.70.50. We want to make sure that we've got our market is oversold, so we've moved to an extreme where we could potentially get a turn in the market. But we also, the critical thing here is we want to make sure that we've got that bullish divergence. So we're not going to take a trade unless we've got that. Now, remembering that when we first enter the trade, so there's our entry, that's the thick green line, there's our entry point. So 61.77, the indicators will give you the entry point. It's the green, solid green dot. Our first trade, the low on that candle there, or that brick I should say, is 67. So our stop becomes 65. So it's always 2 points below the low of the previous brick, or the swing low of that brick. So that's where our stop is at the moment. And our entry point will always be that entry there at 61.77. 6177 is our entry. So basically we have 12 points of risk in the market. So we'll just mark that on our chart, 12 points of risk. Now our goal on the trade is for the actual market to move 10 points, and then once it's moved 10 points we're going to use a trailing stop. So there are two targets that we use on our trade entry. So we'll bring the calculator into the room. There's our buy set up there, so it's an enter long now at 6177, so we've confirmed that. Our stop's always 2 points below the previous swing low, so that's always the case. Previous swing low 2 points below on a buy setup, so that's our current stop, and we'll mark that with a solid red there just so everybody knows exactly what that is. We'll give some weight to that as well. So there's our stop. Now what I'm going to do is I'm going to actually put our targets on the chart. Now the targets are really simply for money management, so how we're going to move our stop up, because remembering with this system but as I mentioned before, so we can use the targets that we've got set up in the Renko hedge strategy. So let's have a look at let's just get our targets in there. So our targets, if I go into the inputs, you'll see that we've got a long target 1, which will color code as a long target 2, and we can put our long target 3. So let's put those targets in. So the first target is 10 points. Now the significance of a 10-point target is that basically once the target goes 10 points, once the trade goes 10 points, we move our stop to a trailing stop. So that's the significance. It means we move from the previous swing low up to, so it trails up, so 61.66, 61.67 would be our trailing stop. And as price moves up, so do we. 61, you see we move up there to 61.75. So our stop starts to move up. Now, it's always going to be a 2-brick stop initially, so that means it's the second stop, the white one. And once we move 20 points, so once we hit that target there, which we do over here, once we move 20 points, then we move to a 1-brick stop. So the 1-brick stop is the closest stop, and you can see there we move up, and as price pushes up to its high point there at 6203, we actually get up to a stop of 61.93. So 61.93 is our stop. So we got into the market, remember, at 61.77.